All right, welcome back, everybody. We got TikTok, Instagram, YouTube, and Facebook all joining us right here, right now for WTF. What the F happened? Well, today there's a lot going on. We're going to really dive into some of the news headlines, what's going on. But, one of the big things we're going to talk about today, and I want you to think about this before we get started. Everything seems like it's going okay with the markets, right? Like last year, we had a lot of fears, recession kicked in, but it just seems like things have been okay. But yet there's still that gut feeling that so many of our clients and so many of the folks we talk to have that makes you kind of think about it as, is everything okay? Well, we're going to talk a lot about that because you know what? Everything isn't okay, but boy, oh boy, when you look at the news and you watch the markets and you look at the different things, it seems like things are okay. Well, that's what I want you to think about. We will be right back after this. All right. Good morning. Good morning. Good morning. We are back with WTF. What the F happened? Where we rant, we rave, and we will argue about what's going on in the news. I'm joined with my partner in crime, Mr. Nagy. What's happening down in Florida?
Hey, what's up, guys? Good morning. Just a busy week this week. Lots of events happening. Lots of different trainings going on. We are leading the way, showing you how to take back control of your money and solve your money problem. And whether you have a money problem or not yet, it looks like it's coming, and we're going to hit on that. What's keeping these markets up right now? Is it the jobs? Is it just a few leading stocks that are just keeping everything up on this house of cards still standing? Where are we going with it? We're going to dive into it right now, Chris.
Well, let's start with what I mentioned before we kick the show off today, and that is that gut feeling that so many of you have. I don't care if it's the TikTok folks, the Instagram folks, the YouTube and Facebook folks that are all joining in. We got a bunch of people piling in. And, I can't help but to think, even myself, that when I look at the news, I get one picture. But then when I actually start reading the white papers, I start reading the headlines and the things that actually tell the truth, I got a gut feeling that tells me something's about to happen. How many of you feel that way? How many of you feel like when you look at the news and you watch things, it seems like everything's kind of okay, but deep down, you just inherently know things are not okay? How many of you feel that way right now? Yes. So we got Nova Life over here saying yes. We got, sorry, I'm getting some of these names. It's covered, but Wilm saying absolutely. We got Chez over here saying that. The YouTube link is at the Chris Naugle. So just my name with the in front of it. Yep. Chez right here on Instagram says it's happening now. Of course we've got, so, I think a lot of you agree. Things look okay from the surface, but we all know deep down there's cracks in the foundation, and those cracks are big, but we can't see it. It'd be like walking through, the woods and somebody, dug a deep hole and has sharp spikes down in the hole, but yet on the top, they make it just look like the ground. We know that those traps are out there. We just don't know where they're at. We don't know what they mean and what's going to happen, but that's inherently what's going on. You got an inverted yield curve. You got the market showing signals everywhere that something's about to happen. But if you're just looking at the indexes, which is what so many people are focused on, partially it looks okay. If you look at employment numbers, it looks okay. If you look at real estate, it looks okay. But if you talk to logistics, if you talk to truck drivers, if you talk to railroaders, things are not okay. If you talk to box manufacturers, their orders are going down significantly. Those are all leading indicators that indicate there is a problem. There's a big problem. And unfortunately, we all know that eventually that problem is going to show its ugly face. And, a lot of people are talking recession. Well, technically speaking, we're in a recession, or we are and we're not. We are and we're not. Washington changed the rules on what a recession was. But you know what? When I look at the news, there's a lot of stuff to really digest. There's a lot of things to understand, but if you just stay focused on the pure fundamentals, it's pretty obvious what's going on. Stephen, what do you think about that? Yep. So we got Viacious saying that we are in a recession, and I completely agree with that. We are. It just doesn't feel like it yet.
Yeah, I mean, it's definitely wild times because, from appearances, it feels like everything's fine. Like inflation is slowly coming back down. Everyone's saying everything's fine. People are working, but when the stock market's held up nicely, but it seems to be when you dig just under that surface, that's where you start to see all those cracks are forming. And that's the problem, is when people do feel like things are fine, or people are kind of distracted by other news. Like I was looking yesterday through the news and everything was popping up about some country music singer. Jason Aldean, I think, came out with some song talking about how he's from a small town, and, people in small towns protect themselves. And, the media just like goes out like, this is the worst thing. It's the racist. It's like, there's all these different distractions going on all the time. And I feel like it's by design sometimes. And it's just crazy. Like, I'll just give you an example of one of those little kind of cracks in the armor. I mean, when we look at the stock market, everything this year has kind of been up a little bit. Everything's looking good, but you look under the surface here, the S&P 500 gains are almost entirely from just 5 companies. So when you look at these 5 companies, they're up 56% this year so far, leaving the total S&P 500 at 8.9%. But it's at 8.9 because of those 5 companies. If we take those 5 companies out of the mix, the S&P would only be up 1.5% this year. So it's just one of those examples of, okay, this looks like it's good, like, hey, the S&P's up, but when we look under the surface, really 495 companies are really struggling right now, with 5 tech companies just really keeping things up. And just so you know, those 5 companies would be Apple, Microsoft, Alphabet, which is Google, Amazon, and NVIDIA, which NVIDIA is a chip maker. And right now, with all the AI talk and everything going on in that space, that's been shooting NVIDIA up because the chips are a big player when it comes to that kind of technology. So just one of those examples, Chris, of what that looks like. And then, I sent you I'll just show you one other thing I saw yesterday that really was mind blowing, but it was, let me pull this up here. So Microsoft and NVIDIA have added $175 billion in market cap today. This was yesterday, more than the market cap of 462 S&P companies, and more than the value of Nike, Wells Fargo, Walt Disney, Morgan Stanley, Intel, etc. It's just, that's mind blowing right there. Like, I don't even know how that happens. And even Elon Musk, just commenting in crazy times. I mean, so just those kinds of things. And I'm sure I could pull up a bunch of examples, but go ahead, Chris.
No, I love the comments coming in. I mean, we got so much stuff coming in. We got people over on TikTok saying more banks failing. Absolutely. But they're keeping that hush hush. There are definitely issues in banks. A matter of fact, headline news on Yahoo Finance, Goldman Sachs profit plunged 58% Q2. So Goldman Sachs is a pretty big bank, and their profits just plunged 58%. So you're right. There's a lot more happening. It feels like the markets are about to crash. Small town gives you worms. So one of the folks over here is saying they got worms. Inflation gave them worms. Not quite sure what that is, but hey, it sounds like kind of a problem, but more of a personal problem if you got worms. Tech's always been the hella over. Oh yeah, tech has always been hella overvalued. It's a good point, I think. Then over here we got Brian. I really like Brian's comment coming in from YouTube. He said the Fed is holding up the banks. If you all remember when Silicon Valley and Signature and Republic and so many others were failing, and the people that had accounts above and beyond the $250,000 cap for the FDIC, the Fed bailed them out, saying, oh, it's not going to come on the taxpayers. Yes, it is. It's not going to come on the taxpayers directly, but indirectly it always lands in the taxpayers. But he's absolutely correct. And he said, anything all in people go insane. So over here, GPAC 17 on Instagram said it's happening, but in different sectors than we're used to: commercial real estate, banking, and consumables. All of these are great pieces of information coming in, and it can all just be summed up into a couple words. The couple words would be manipulation, and let's not forget about the .com crash. Right now, you've got AI driving the markets insane. Like, why is it that Alphabet and why is it that Microsoft are going berserk? It's solely because of AI. And it's all speculation. I'm not saying AI is not going to be a big piece of the future, but it is definitely speculative. It's very early on, but it's got people excited. ChatGPT really fired up the markets, fired up Microsoft and Amazon, and it's been a race into AI, which is actually a scary thing. If you listen to what Elon Musk says about AI, it's a frightening thought. But in the 2000s, some of you are too young to remember this, but this is right before I entered Wall Street. I owned, skateboard, snowboard shops during this. But during that period of time, there were a ton of tech companies, all driven by speculation, driving the market, very much like it is today. A few companies were literally driving the market up. So like what you just said there, Stephen, about those couple companies, and it's not FANG anymore, but it's pretty darn close to the FANG like it was back in 2020. There's a couple companies that are holding the entire index up, whether it's the Dow, the NASDAQ, or the S&P 500. All of them are being propped up by just a couple companies. So what that means is we're literally just a couple companies away from a complete and utter crash should something happen with them. And, Murphy's Law, it will. But you got to really look at that. I was reviewing a client's portfolio the other day. This client's got about $10 million in investable assets. And when I was looking through all of the portfolios managed by somebody else, I couldn't help but to notice that the duplications amongst the portfolios. And the only reason the portfolios had any gains, which were very small for that matter, and I'm sure most of your portfolios, folks, on TikTok, Instagram, YouTube, and Facebook, if you look at your portfolio, you'll probably see the same thing. It's lackluster growth. You're barely growing, okay? From what I saw in these portfolios, which are very deeply diversified, the growth was between 3 and 5%. 3 and 5%. I mean, Stephen and I laugh at that number because we could show you all how to get 12% secured in first position all day long, which, so when we hear 3 to 5, we're like, oh, those are guaranteed rates. We can get you that in a whole life insurance policy designed the right way. So if you're excited about 3 or 5%, you're excited about all the wrong things. But in that portfolio that I looked at, the only reason it even had those gains was because of a small number of tech stocks. That's it. So whether you're looking at an $8 million, $10 million, $300,000, $3,000 portfolio, it's going to be the same thing. All of your portfolios, all of your market-based investments are being propped up by a small number of companies, just like the overall indexes are. And that is literally staring down the barrel of disaster. It truly is. If nothing else is doing well, but everything is all relying on a couple companies, what happens when one of those 5 has trouble? What happens when one of those 5 has a bad news thing that comes out, or the government decides to probe them like they did with Facebook back so many years ago? What happens when one domino goes down? Well, you've all seen dominoes, right? One goes down, the rest goes. And that's that gut feeling, folks. You've got to be logical about this. Stop chasing returns right now. There is no money to be made in the stock market. It's a dangerous proposition if you're trying to grow using the stock market right now. Stephen, show them what you got here.
Just a heat map of the S&P 500, just kind of visualizing what we were just saying with how just some of these, very few companies are just driving everything and everybody else is just really struggling right now. It kind of reminds me of people right now. I feel like, you have some people that are really thriving and just a large majority that are like barely hanging on to a thread at that 1.8% level and, ready to fall off that cliff because they're not expecting it. They don't know what to do. And I like to think that's why we're here. People that are like, hey, this shit is about to hit the fan. Like, I better do something and be prepared for it. And then, they come from this show and join us at 1:00 for Wealth Webinar, or in a couple weeks, they come out to Raleigh, North Carolina and hang out for a couple days with us in person and really talk strategy and what to do and stuff like that. But it's just fascinating just seeing how some of these very few companies are just keeping everything up right now.
Yeah, the timing is perfect for that Raleigh event. I mean, folks, for any of you that don't know, we're doing a money tank event. That's what the event's called. It's Money Tank. It's all about money. People with money meet people that need money. Quite simple concept, right? It's like an event that would be similar to like speed dating, but except for you're not dating to date, you're dating for money. And there's going to be a lot of people in that room with big money. And then there's going to be a lot of people in that room that need money for their businesses, for their real estate opportunities. And folks, if you want to join us in Raleigh, we're going to be there the 4th and the 5th. And we'll give you the ability this afternoon at 1 o'clock to get those tickets half off for the event, or the virtual tickets for, practically nothing. But I want to go back to a couple things here because there's a couple good points. Tavis Grows over here on TikTok said, then you buy more of it, as history has proven. So what Tavis is talking about is what we talk about every day, Stephen. He's talking about, waiting and being patient and waiting for the market cycles to kick in. And it's a tough thing to do because some of us want the markets to fall. Some of us don't want the markets to fall. Some of us just don't really care because we're just not looking at it. But as Tavis said, when the market goes down, it creates a massive opportunity. Folks, we are literally right on the brink of one of the biggest opportunities of all of your lifetimes. But the problem for so many folks is that they're not going to be ready for the opportunity because they're putting all their chips on the table now. They're taking all the bets right now at the absolute wrong time. It'd be like being at the casino and, the dealer changes the cards, right? And I'm not a gambler, so I might get this terminology wrong, but you've all done this, right? The dealer goes through all the cards and then they put a new deck of cards in. You were on a winning streak. Then all of a sudden, just like that, it turns and you just can't seem to get a winning hand. That's where we're at right now. You're not going to get a winning hand. Like the tides are not in your favor right now. We're at the top of the market. There's no more growth left. We can maybe test the highs, but we're not going to make new highs. The economy is not strong enough to make new highs. And especially with that heat map, Stephen, I'm not surprised that's the first time I've seen that. That heat map shows you the markets are not strong at all. It's kind of like you said, like when you look around, it seems like a couple people are making a lot of money and other people are struggling to afford groceries. Like, where's the disconnect? The disconnect is we're at the end of a cycle. That's all this is. It's all this is. And you got to get prepared for it. As Tavis said, if you want to take advantage of this opportunity when the market goes down to buy more, you got to be ready. You got to have the powder. You got to be ready for buying. And what is that going to take? Patience right now, proper planning right now. And it's going to require so many of you to do something that seems to be one of the hardest things when it comes to investing, and that is sell. I know it sounds crazy, right? You know what all of you need to do? Sell. Warren Buffett says it. You buy low and you sell high. Where is the market right now? High. So if you all can agree the market's high, why would you not sell? Oh, I got to pay taxes. Good. Pay the taxes because taxes are going up in the future. We all know that. Pay the taxes now. It's like getting a discount. It's like walking into Walmart. It's rollback time. Man, taxes are low. Don't be afraid of paying taxes on gains. Here's what you should be afraid of is not paying taxes, because if you're not paying taxes, that means you're losing. Do you want to lose money or do you want to make money and pay a little bit in taxes? Like, it's your decision, because like right now, this is the line in the sand. This is your moment. This is seriously your moment. You got to make a decision. Buy low, sell high, and don't lose money. Don't buy high, sell low, and lose money. That's backwards, but that's what people are doing. People are plowing money into indexes. I mean, IULs, Index Universal Lives, people are plowing money into those. They're awful vehicles. It's the wrong time for them. I'm not saying there's not a place in the market, but now isn't the time for them. Like, why would you put your money in a market-based vehicle that is driven solely by the index when the indexes are literally at the top and they're not going to go any higher? We all know that. The economy is not going up. The economy is softening. You all see it. The unemployment numbers are going up. They're not going down. That means the economy's softening. If the economy's softening, the stock market's going to soften next. If box orders are going down and future, box orders, when they look at it, are way down, and logistics are way down, and truck drivers are seeing that their loads are less and gas prices are higher. All these are leading indicators telling you we're going one place and one place only, and that's down the other side. It's a natural cycle. There's nothing wrong with this. It always happens this way. The news just won't tell you this because it's not what people want. People don't want to hear that. Okay. It's not good for elections. It's not good for votes. Nobody wants you to think there's an election coming when there's a big election coming up next year, which is going to be freaking interesting. But it's just, you just got to look at what's going on. I mean, let's just hit some of the news articles.
Yeah. Like real fast, Chris, like if you look over in the comments, people are just agreeing, over on YouTube, NASDAQ rebalanced this month. But Sharon says diversification. So I would like to just hit on diversification real briefly because, as a new financial advisor many, many years ago, that's what was really preached to us, hey, teach your clients to diversify, diversify, diversify. We've all heard it. And, that's kind of the argument for a 401k is it diversifies your portfolio, or investing in mutual funds, it diversifies your portfolio. But what are you really diversifying in? You're diversifying in multiple companies, but all of these companies are all held up by the same stuff, by the Federal Reserve, by the banking system, by the economy. So when things crash, like they happened in 2008, like happened in 2001, everything comes down along with it. So if you're diversified, but still in the same asset class of stocks in the stock market, well, when things come down, you're going to come down with it. And here's what most people don't understand is, yes, you can go ahead and ride that if you have time, and you can dollar cost average in, and you'll eventually get to the bottom. And I'm all for that kind of thing. But if you know that the market is going to pull back at some point here coming up soon, why would you knock it out right now and get into something else to protect your money and then start buying in once it starts to come down? Like, why take that drop with it? I never understood that side of diversification and line of thinking. So I just wanted to give you an example real fast, Chris. So if we look at China, okay, so a lot of American companies, banks investing in China. So BlackRock, for example, was one of the largest investors in a company called Evergrande, which is one of the largest developers in China. And BlackRock is a company that manages many portfolios, mutual funds.
How about all of them? They own just about everything, Stephen. We can be
right.
honest.
So they control. So they're investing in stuff like this. So like, you don't know what's going on. But look at this. Evergrande just came out with this yesterday. Evergrande posts losses of $81 billion over the last 2 years. And they've been delaying this report because they didn't want to admit to it. But this is what these people are doing with your money when you just blindly give it to an advisor, or throw it in your 401ks, or put it in these lifestyle funds, index funds, mutual funds, whatever. Like, when you realize that, and then just to continue with this, I think I got to stop the share and reshare, but let me just show you kind of what this looks like in the real world. So then we look at, what these U.S. venture firms are doing. So this is a Wall Street Journal article from today. U.S. venture firms deals in China tech investigated by Congress panel. So all these U.S. venture firms are taking your money and they're throwing it at these tech companies, these startup companies over in China. And House Select Committees say American firms' investments contributed to China's military buildup and rights abuses. So there's like all this shadiness going on over there. And then on top of that, I'll just show you one more thing that I just saw pop up that I thought was interesting. So right here. So China says foreign trades faces extremely severe situation, blames geopolitics for slump. So as these companies are investing over there, now China's coming out and saying, hey, we're in big trouble right now when it comes to foreign trade. This is an extremely severe situation. I mean, China's Commerce Ministry on Wednesday said non-economic factors were growing and interfering with trade. I mean, all of this between the Evergrande losses, the real estate challenges they're having, all these trade difficulties they're facing, like all of this stuff is greatly affecting these big, huge companies that are controlling your money right now. So I just bring this up to hopefully some of this will start to open people's eyes. Like, man, there's a lot of stuff going on. Maybe I should start paying attention a little bit, right?
Yeah, I think you're absolutely right. I mean, I love that. And I've read a lot about China. I mean, China's not, they're in a lot of trouble right now. They've got a lot of issues, a lot of headwinds that they're facing, trying to keep their GDP growing. And it's really not. But we're not hearing about it. But I mean, that's because China doesn't really release their news. But I want to go back to that diversification thing that Sharon said over here on YouTube. I mean, I think you're absolutely correct. One of the biggest problems when we talk diversification, because diversification certainly works. I mean, ask Ray Dalio, but people don't understand diversification, and most advisors don't understand diversification. Diversification in its truest form is you have a little bit of a lot of different things that balance it out. When one's down, another's up. But if all you're doing is diversifying in a portfolio of stocks, bonds, mutual funds, and ETFs, it's all market-driven stuff, right? It's all general stock market. Now, if you were to pull that heat map up again, that's what you're diversifying amongst. You're not going to win there. If you follow Ray Dalio, and he's got a great example, it's called the all-weather portfolio. You'll notice that diversification by his is diversification of asset classes. And I'm going to come back to what somebody said over there on TikTok about real estate. We're going to talk about that in a second because I got a really
Chris, real fast. And as an advisor, one other thing just to add to that real quick, and you keep going. But we hear a lot of the times, well, I'm diversifying, I'm putting money in REITs. you always hear about REITs, real
Oh
estate
my God,
investment
do
trusts.
not do
So,
that.
so yes, please just hit on that real fast, because that's another. I'll just go ahead and say the way advisors are saying this, in my opinion, is just a lie. Like, but go ahead on REITs. And
Well, I
maybe
mean,
if people join us at 1, this might be a good topic to talk about today, because I'm hearing a lot about it. Like, should I get into syndication? Should I get into real estate investing? Should I get into REITs? Like, all these different real estate terms are being thrown out right now, because I think of the reason is because people are waking up to get out of the stock market, so they're looking for alternatives. But dude, syndications, you got to be really, 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 really careful. REITs, what a joke. But go ahead, Chris.
all right. So I know a lot about REITs. I remember, folks, some of you, maybe you're joining us for the first time. I know we got Danny Boy over here who comes on quite a bit. But, for those of you joining, I just want to give you just a bit of our background. I come from the Wall Street world. 2003, I entered Wall Street. I spent 16 years as a high-level advisor. I sold a lot of REITs. Why? Because my consultants and the brokerage firms I worked for told me, sell REITs. These are great. They're going to give exposure to real estate. I'm like, oh yeah, all my wealthiest clients are in real estate. But what you don't understand is I to be quite honest, have found and have seen very few REITs that ever performed to expectation. Now, I had one that was like my shining star. I own this in my Schwab portfolio from back when I was an advisor. It started as Cole Capital. Okay, that was the name. It was a private REIT. Okay, it paid 5.3%, and it was great. And it was going up in value. It held big commercial buildings like Amazon warehouses, Walmarts, Rite Aids, Walgreens. It was like an all-star portfolio back then. Then it spun off to another company called Griffin. Then Griffin sold it and it went public. And the stock share price has dropped and plummeted tremendously. My portfolio was worth $85,000 in this REIT. It is now worth $22,000. And I'll bet you if any of you own a REIT, you probably have a similar story. God forbid you own a publicly traded REIT. They are not what you think, and you are not buying into real estate like you would if you were just independently buying real estate. Now, let me just hit on syndications. A lot of you, sorry, my phone was ringing. I don't know how that's happening. A lot of you have heard about syndications, and you like the idea of syndications because you think you're getting real estate. You're sharing in the depreciable part of the real estate. Sorry, what about TikTok or Instagram there? It's going to be a bit wonky because a phone call came in. But syndications are dangerous. I know a lot of people that are invested in syndications. I know a ton of people that raise money for syndications, and the people raising money for syndications don't have the slightest effing clue what they're raising money for. They don't even know what the syndication is truly buying. They're just told by somebody how good it's going to be. But I don't know how many of you own syndications, but I bet you a lot of you that own syndications, if you've tried to get liquidity, or maybe there was a specific date when you were supposed to get your money back, how many of you actually got your money back right now? I bet you it's a very small percentage right now. Do you know why? Because syndication model relies on appreciation of that. They rely on the appreciation of the real estate going up. Where is appreciation going right now? Not up. I'll prove it in a second. Okay, I got a whole article done by CoreLogic.com. You guys can look it up. They're a reporting agency, a very big one in the real estate space. But real estate values are coming down across the country. Matter of fact, I'm just going to read this right now. Let's see here. I got a whole article on this. Yeah, so home sales have been falling for 21 straight months, okay, which is more than the Great Recession, because during the Great Recession, total home sales declined for 16 months. We have now seen a decline in home prices and home values. Depending on where you're at in the country, it's going to vary, but for 21 months, okay? So if a syndication is buying apartment buildings, part of their growth is from rental. Okay, that's the big part of it. And another part is appreciation. But it's not so much that they're not making money. It's that they can't get liquidity. They can't pay the investors back, because to do that, they got to refinance it with a bank. Have any of you gone to a bank to try to refinance your property? Have any of you gone to a bank to try to finance a new real estate project? It ain't easy, is it? I don't care if you had the best relationship. Like, I've got one of the greatest relationships. I've done hundreds and hundreds of loans with a community bank here locally called Alden State Bank, and they have changed all their lending criteria. Why? Because the central banks don't want banks lending. They're trying to slow the economy down, not speed it up. And what speeds the economy up? Banks printing money and loaning money to you. So they made it really hard. So if you have a syndication, chances of you getting your money back, good luck. I don't know what else to tell you. I've got a lot of very wealthy clients that invested in syndications and benefited from the tax savings. So that's the reason you should look at syndications. But if you're looking at syndications because you want a big payday, because of the appreciation of the portfolio, and they bought this apartment at this price and it's going to go here, wrong. let me move on to this. I want you all to pay attention. This is a great article, and I'm going to read it. 5 home markets are at risk of imminent decline. 4 areas are in Florida, and Stephen's in Florida. A recent report from CoreLogic showed that at a 50% to 75% confidence level, there is a 70% chance of price declines in 5 major real estate markets over the next 12 months. There's a lot more than these 5, but the top 5 are Provo, Utah, Lakeland, Winter Haven, Florida, North Post, Sarasota. There's Cape Coral, Fort Myers, Florida, Port St. Lucia, Florida. So if you really look at them, all of these markets have seen significant declines in price. Florida might be one of the top real estate markets, but it's in a bubble. And it goes on to talk about southern Florida, like Miami and Palm Beach. Their prices are even higher, so the bubble's even bigger there. Buyers have bid up formerly more affordable areas. CoreLogic, just so you know who they are, they're a forecasting reporting agency, one of the biggest out there. Okay. And what they do is they look at all of the data, solely data, and they put out reports. And it says now Florida looks like it's the bubbliest real estate market of all, given that New York, New Jersey, and California have the highest floor prices due to better wages and business conditions. And this whole article keeps going on, but here's one thing he says. The urgency of CoreLogic's warnings here is refreshing, as most economists stretch to see a soft landing in an extreme tightening cycle, which likely is not over yet, because we've already heard that. Jerome Powell said they're not done raising interest rates. When historically a soft landing, as you've heard in the news, and frickin' Kramer, did you see it the other day in the news? And I wish it was today. Kramer said that we're still going to see a soft landing. Do you all realize that a soft landing has never happened in history? In events like what we're in right now with the tightening and, as fast as they've been raising interest rates and unwinding the balance sheet, a soft landing has never happened yet. So if it did happen, this will be the very first time. So for those of you optimists out there, maybe this will be the first time, but if we study history, it's never happened. So it's probably not going to happen. Those are the facts, folks. So when you're looking at real estate, there's always money to be made in real estate, no matter what cycle you're in, but you better be in the right sector of real estate, and you better be playing the right game in real estate. And I hate to tell you this, and some of you are going to be really pissed off. Syndications aren't the right game because they rely on appreciation. And if you don't need your money, great. Syndications might be good from the tax side. Okay. And you can get a little bit of income, like a pref return. But if you need your money back, or you're hoping to get your money back, or, they said you're going to get your money back in 24 months, you're not probably going to get your money back. It's going to wait it out. You might be in that deal for the next 5, 7, 10 years. So buckle up, get ready. That's going to be the problem, is liquidity in the marketplace. Stephen, anything you got to say on that?
Yeah, Jim Cramer doesn't agree with you, so I don't know what to tell you, man.
Oh, yeah. Jim Cramer's probably way smarter than me, right? Jim Cramer doesn't see a recession on the horizon, says recent.
He's never been wrong.
He's never been right. Matter of fact, if any of you are betting folks, if you like gambling, try to find someone that will take a bet that Jim Cramer is going to be right or wrong and bet against Jim Cramer. He's always wrong. He said it just doesn't hold up under close scrutiny. Jim Cramer doesn't do any scrutiny, clearly, because the dude's always wrong. Yeah, I feel like he's taking the bait. Somebody's paying him to drive a narrative. That's what I think. Somebody on TikTok said another broken clock economist with the end is near. I'm not saying the end is near. I'm just telling you what you can expect to have happen. I'm not sitting here saying the end is near. Oh my God, dig a bunker in your backyard because we're going to need it. Stock up on food, stock up on ammo. Did you hear me saying that, jerk? No. I'm just simply telling you, cyclically and historically, if you follow the cycles, you follow the signs, we know where we're going. And I'm not the one saying it. CoreLogic is. So it's not some broke down economist talking. That's CoreLogic. So if you're smarter than CoreLogic and you got more data than CoreLogic, dude, why are you even on TikTok? You should be on your own little island, and you don't even need to be here. But you're not. You're probably 18 years old, sitting there and just making comments like most. This
is just the funniest thing I've ever seen in my life, though. Kramer's wrong so often that somebody created the inverse Kramer tracker ETF. So you can you can invest in this ETF fund, and it literally just invests in the opposite of what Kramer says.
Oh my God. And here's the beauty.
I love
Like
the
we all live
internet.
in the greatest, yeah, we all live in the greatest country on earth where things like that can happen. When people like Elon Musk can literally go against the narrative on everything, and someone can come on TikTok and say, we're just a broke down clock trying to drive a doomsday type scenario. But all of you have your own free will. You can all do whatever you want. You can continue to buy the indexes. You can plow your money into the IULs. You can just keep doing whatever you want. Buy those syndications, buy the S&P 500, buy the NASDAQ. And listen, God bless you. It's a free country. You can vote for who you want to. You can say what you want. It's freedom of speech, or at least it used to be. You can do whatever you want. But it's not about that. It's about what is probable to happen. What is the probability of the market going higher, and what is the probability of the market going lower? Forget about the doomsday stuff, but like literally just logically look at the whole situation and then make a probable decision, a gut feeling decision on what you think is going to happen. And then that should make all the sense in the world to you based on your needs, your goals, and then you do whatever you need. Because I don't want to come back on this show next year and say, well, I bet you there's a bunch of you saying I shoulda, I coulda, I woulda. And I'm trying to kind of point you all in the right direction, at least what we think is the right direction, but we can't time the market. The news is telling you what's going to happen. Like right here, this is on Yahoo Finance, 10 reasons why the recession that Wall Street predicted to death never showed up. So there's somebody saying, oh, the recession never showed up. No, actually, the recession did show up. It just doesn't feel like a recession yet. You're a little early. So that right there is a news article 21 months ago or 21 hours ago that probably is just looking at the current thing and saying, oh, it never showed up. Of course it hasn't, because you can't time the market. It's not here yet. Stephen, look at that. Look at that chart. Man, for any of you that are investing in the market, like, how you doing now? Like, you haven't made any money in 2 freaking years. If you've been in the market for 2 years, you've made nothing. You've gone completely sideways, actually more down than up. This is the first period of time since, hold on, where are we at? My eyes are so bad. Since 2022, this is the very first time right here, right now. I'm looking at a chart, Dow Jones. You can all look at it. Smarty pants over here. You can look at the Dow Jones. Just look at a chart. Not hard to see. Draw a line across where we're at right now and just take it straight over. This is the first time since 2022 that the market has reached this level, and there's no way it's going to hold at this level. There's no way it's going to go higher. The economy is not strong enough to push it higher. So not everybody is flat or down. You're absolutely correct. You're absolutely correct. I'm simply looking at the Dow Jones, sir or ma'am. Not everybody, you might be invested in, maybe you bought NVIDIA, or maybe you bought Meta, or maybe you bought Microsoft. You're doing really well right now, but it's not about what you make, it's about what you keep. And I think all of you should really preface that and think about that. It's not what you make or what you've made, it's what you keep. That's what the wealthy know that the rich don't. People playing rich, they've made money, but they don't know how to keep it. Wealthy, they've learned how not to give money back. And you know what? That's what I subscribe to. That's what Stephen subscribes to. That's what we teach. And that's what I like to talk about. It's not about making more. It's about keeping all of what you've made so far. So for any of you that want to brag about how much money you've made, that's great. Brag, please. Tell us how much money you made. You became a millionaire. But I challenge you to this one thing. Keep it. Show me that you can keep it, because you probably can't, because a gambler once is always a gambler, right? That inherent inside gambling notion will keep you pushing to try to make more and more. And eventually the bottom will fall out and you will lose what you made. And then the whole story will be a different story. You'll just be playing the same game. Sometimes it takes people a few times to learn. It did me. Shit, it took me way too many times to learn. I guess I'm thick-headed, because it always takes me losing to be like, I don't like this losing thing. I think I'm just going to play the game of keeping the wealth that I've made. And you know what? I'm not going to be the wealthiest guy because of it, because I'm all about slow and steady growth. But I don't give my money back. When I make it, I make sure I keep it. And I think that's a big thing for some of you. And I think a lot of you probably are thinking the same thing. Yeah, you know what? Maybe we should be thinking about keeping what we've made. Know when to hold them and know when to fold them. That's all I'll say. What else we got in the news, Stephen? I know there's some other good stuff here. And while Stephen's coming up with an article here, I want to remind all of you that this afternoon we're doing a wealth webinar. We do it every Wednesday at 1 p.m. Eastern. It's totally free. We even give you my 3 books. I've got 6 books, but you're going to get 3. How to get all the money back for every car you buy, drive, and own, mapping out the millionaire mystery, and the private money guide. So you get all 3 of my books just for registering for the wealth webinar this afternoon at 1 p.m. And to register, it's super easy. Go to chrisnaugle.com and register for the wealth webinar. And we're going to be talking real estate, how to be your own bank. And we're going to be talking about in depth a lot more of the stuff that we're going into right here. What do we got, Stephen?
Yeah, I mean, I can just kind of give an update on housing starts. We like to kind of hit the markets, different updates each week. So after a surprising surge in May, U.S. housing starts and building permits both declined in June, down 8% and 3.7% respectively. And starts saw sizable downward revisions from last month. So actually, the hot May did drop a little bit, but just kind of see it's been up and down for the housing starts and building permits over the last several months. When you look under the hood, only single family building permits increased in June. This is the 6th month in a row of increases. A lot of that has to do with just the lack of housing still. A lot of people right now are not selling. They realize that if they sell now, they'll get maybe a good price, but then where are they going to go? And by selling, a lot of people are locked in right now to 2 to 4% mortgage rates. And they know if they sell and rebuy, that mortgage rate, where are we at right now? About 8%. I'll pull that up in a second, but they know that their mortgage rate is going to drastically increase. And smart money tells you that's not always a great idea, especially if you've had your lower interest rate mortgage for several years. Remember, banks get 80, 90+% of the interest that they make on a 30-year fixed mortgage in the first 7 to 8, 9, 10 years. And so if you've owned a house since, let's say, maybe 2015, maybe you bought a house in 2015, there was great prices back then, great mortgage rates, 2.5%, 3%. So maybe you bought that house 2015. Well, even the small amount of interest you were paying, 3%, is still actually a large amount because the banks are getting all that interest in those first 7, 8 years that you've owned that house. So if you sell now, that restarts. Remember, there's due on sale clauses in every single mortgage in this country in the last 30 years, meaning when you sell, you're required to end that mortgage and start a new one. So you'd have to, give up the 3% to get into an 8% mortgage. So all of a sudden that $500,000 house is your mortgage payment's now double. So it's just not making a lot of sense for people to sell right now. And so that's really created still a lack of inventory, which is keeping prices high, which is driving people to look at, building new houses just because there's no other options really right now.
Well, Stephen, I'm really glad you brought that up. And I've been reading a lot of white papers about that. We keep talking about real estate and how pricing keeps going up in certain parts of the country, my area included, except for the higher end real estate. And you got to kind of ask that question, like, what's driving it? It is demand, but it's not real demand. It's demand because of what he just said. Folks that have houses don't want to sell their house because where are they going to go? Like, right, they own a house. They know they can sell it and make a good profit. But if they sell the house, they got to move somewhere else. And that somewhere else is going to cost more. And the cost of financing it is going to be more. And the difficulty of getting a mortgage is going to be difficult. So when we look at the demand, it's almost smoke and mirrors. There is demand, but the demand is simply because you've gridlocked the entire real estate market with having such low interest rates, driving interest rates up so fast, not giving people a chance to really transition. So people are just hanging on to houses. And why would you sell why would you sell your house right now? Literally. And unless you got a job offer somewhere else, there's a lot of reasons. Kids move to another state and you want to follow them. But why would you sell your house when you got a mortgage at 3 or 4% to move into another house that costs you even more? So you sell and you make a profit, but then you got to buy another house and you're going to lose the profit to the appreciated price of the new house. Plus then you lose every single month because the interest rates double where it was when you bought your current house. That's the gridlock, folks. It's different than 2008, but really at the end of the day, it's kind of one and the same. The demand, as much as it's real, it's not real. It's just artificially created by what the Fed did. And I want to come over here to what Tweety said, because remember earlier I said it's not what you make, it's what you keep. And this is what I mean. Tweety joins us on TikTok all the time, usually not so much in a good way, but Tweety said, one of my stocks split last year in October. It's already gone up $42 per share since then. Now, first off, I want to give Tweety a high five because Tweety's up. But will Tweety be smart enough to actually take the gains off the table? Because the chances are most people, and Tweety, I'm not saying anything against you. If you are smart, you would probably get out of that stock and take those gains and call it a day and give big, real high fives. But Tweety will probably ride that thing out until it loses the $42 that it made and continues to go south of where it's at, because Oh, it's going to come back. It's going to split again. It's going to do this again. Sometimes you got to know when to hold them and fold them. And the wealthy always know how to keep their money instead of giving it back. And I want to hit one other thing that was a really, really good comment over here on TikTok. I want you guys to listen to this. This is from Novacek. Okay, this is going to tell you a lot of the manipulation and the crap that's going on the markets. Check this out. Novacek said, our company sold 3 times in 3 years. Think about that. You own a company and you sell your company 3 times over 3 years. Crazy shit, right? 3 times in 3 years to 3 different hedge funds. So sold it once to a hedge fund, sold it twice to a hedge fund, sold it again the third year to another hedge fund. And then this is the kicker. They piled the debt onto the employees. Oh, that's right up a hedge fund's alley, isn't it? And you got to love those hedge funds. Piles all the debt of all those 3 mergers and acquisitions all on the employees. Who loses? The common folk does, folks, the common folk. But that's the shit that's going on right now. You know, if you look at investment banking and you look at mergers and acquisitions, like over the last couple of years, has been crazy how much has been happening there. I want to come over here because there's also some fantastic fantastic questions coming in here from YouTube. I want to show some love. There's one that came in.
I like this one right here.
I'm just waiting.
Just waiting for Chris to drop the F-bomb.
Yeah, well, I don't want to put any money in the swear jar today. I'm trying to be good. But I like this one, Stephen. Rick Proctor, and we're going to tick some people off here. Rick Proctor said, Biden sure does not see a recession at all. He's doing great in his own mind. I'll let all of you think about let all of you just think about that one in your own thoughts. He's doing great in his own mind. Oh, well said, Rick. Well said. Then we got another one coming in here. Michael said, I would look at real estate syndications as an actual piece of real estate. And he's right, because you are technically a limited partner in the actual real estate. You're taking an equity position in that actual real estate or whatever the syndication is raising for. But then he goes on to say, the question is, would you want to buy at market prices today, which are high prices? I wouldn't, he said, unless I was keeping it indefinitely. Like I said earlier with syndications, it's a great comment. Like I mentioned earlier, he's reverberating everything I said just in a different way and actually a smarter way than I said it. If you're going to buy into syndications, there's a couple reasons you would buy in. Number one, maybe you want the pref return, the interest rate, which is typically a little lower than what you could get if you just did private lending. Maybe it's the tax play, the depreciation and the ability to share in the depreciation. That's huge for wealthy individuals. I mean, some folks that maybe exit a company like Novacek exited a company. If she put money in a syndication, she might not pay much in taxes because of the way that she could structure the deal in the syndication. But the one thing that Michael is saying here is if you buy into a syndication, you're going to hold it for a long time. So I hope you did it just for the taxes and for the pref return. I hope the pref return continues to pay because it's not guaranteed, because you're probably not getting out of that syndication anytime soon. That's all you need to know. It really is. All right. What else we got in the news? I'm just looking some of these. There's so many great comments coming in.
Yeah, just can I play a 15-second video just to get a quick laugh for the day?
Yeah, here, I'm going to bring this screen over here and show it.
So if you're listening to this guy, good luck to you.
They brought Israelis and Palestinians together at a political level, and I'll go ahead and hold Shram.
Yeah.
And as I affirmed in front, we brought Israelis.
Was he drinking? Like, did he have a couple Manhattans on the plane?
Was he awake? I don't know. I think he needs to hit a little of that cocaine they found the other day, you know?
Yeah. I mean, my gosh, yeah, they must have, they're sharing a little bit of that good stuff with Mr. Biden there.
He dropped his bag, man. He's falling asleep. I don't know.
Could anyone understand what he said? Because maybe I'm just having a hard time hearing. I am getting older and maybe I should clean my ears out. But did anyone understand anything that he just said there? So again, back to what was just said. In his own mind. Oh, what is going on in his mind? Oh, gosh. I don't think any of you want to know that because it won't be good. But anyway, moving beyond that, you aren't going to show the whole speech. So this is a political comedy show. I mean, Jeff, if you want us to show the whole speech, we can if anyone's got time. But I think most people, Jeff, would say,
relax. We're just having fun and joking around.
Yeah, we're just having fun. But like I told you, we're going to piss someone off by saying that. All right. And Shauna comes in and says, Shauna chiming in, she says, that's also why BYOB is pay yourself first, Banks are pay the banks first. And I love that comment.
Love it.
All right. So let's see. I think you can find a clip on anyone sounding dumb. Matter of fact, Jeff, I'll agree with you on that. I think you can find a clip from anyone sounding dumb recently. So I was on Brad Lee's podcast and I talked about being your own bank. I talked about my technology company, Private Money Club. Well, this one guy, on Instagram took a small little piece of my entire hour-long podcast with Brad Lee. He chopped this one little piece where I'm talking about the specially designed whole life. And then he completely bashes it and says, oh, he's not telling you the whole story. Beware, buyer beware, scam alert. And he's going on and on. So Jeff, it's not just us doing it to Biden. People do it to me all the time. Because if you watch the whole Brad Lee podcast, you would see that I do cover all the stuff that he was saying, buyers beware, and all the stuff he was saying, oh, be careful. These guys are just trying to tell you a piece of the story. So I totally get it, Jeff. We're just having fun. And I'm sure that guy was just trying to steal some of my 300 and some thousand followers. But hey, it's all in good fun. And haters need hugs too. Listen, you can take a lot of lessons from a lot of the successful people. I don't care if it's Trump or Biden or Elon. Bad news is good news because it drives viewership. And hey, sometimes that's the best game to play. And there's a couple really good people. So yeah, you can find a clip of anyone sounding dumb. Jeff, I'm sure there's clips of you sounding dumb too, but it's all part of the game. All right. What other comments we got? Let's see. Well, here, I'll come back over here to right now. It's been in the news a lot. I don't really know how important it is, but Microsoft and Activision. So Microsoft's been trying to acquire Activision, but there's been a whole bunch of red tape that's come up, and they're trying to extend the deadline to October 18th. Now, here's the only buyer beware type of thing. Microsoft stock is on fire. And when Stephen showed the heat map, whether you guys saw it or not, Microsoft is skyrocketed. Now, if this Activision deal actually goes defunct and doesn't happen, which right now it's facing all sorts of headwinds, so it may not happen, what will that do to the price of Microsoft stock? I would have to believe it won't be good. So there's a lot of speculation built into the markets. The markets are always trying to build in news before any of us ever even see it. So I'm sure a lot of that might be built into the price of Microsoft, but it could go both ways. Maybe they're building in the fact that they think it's going to go through, which would be good for Microsoft, or maybe they're building in the fact that it might not go through, which, obviously might hurt the stock's price. But it's just another thing to consider if you own Microsoft or are thinking about buying Microsoft because it's been on a tear. I think you're falling into the FOMO, the fear of missing out, and that's a dangerous thing. But outside of that, in the news, just a bunch of nonsense, a bunch of stuff that really doesn't say anything, stuff about Ukraine. There's still wildfires going on up in Canada. The other day we had more smog warnings, and I run every morning. So I'm running, and I guess it's like smoking cigarettes. So I've never smoked in my life, but hey, going for a run, it's like smoking a pack of cigarettes. So, hey, I got to take a little bit of time off my life. We can't be here forever, I suppose. And somebody's got to get those death benefit proceeds that I got all built up there. So, Stephen, let's talk a little bit about, you want to just kind of give everybody a little info on the stuff that we've got going on today, because we've got 3 more live events happening today. And then we've got the Raleigh, North Carolina. Do you want to just hit on that a little bit?
Yeah, definitely. So 1:00 Eastern today, we got a wealth webinar going on, and you can go over to chrisnaugle.com, just scroll down a little bit, wealth webinar series. And actually, if you register, it's a free webinar we do every single Wednesday at 1 p.m. Eastern. And when you register, we actually are going to send you 3 books, 3 digital books, completely free of charge as well, mapping out the millionaire mystery, how to get every dollar back for every car you'll ever buy, drive, and own, quick start guide, and the private money guide real estate edition. People say that mapping out the millionaire mysteries changed their life, but we're giving it to you free just to come check out our wealth webinar. And what we found, that people that come to our wealth webinar come every single week because the information is so valuable. So join us today at 1:00. Check it out. Chris and I are going to go in deep on the real estate markets and how to really control your wealth using what's called the infinite banking concept. And as my hat says in the sign behind me, be your own banker. And it's real powerful stuff. And then tonight at 6 p.m., we have a show. I don't know if you have the link for that, how to register for that one, Chris, but at 6 p.m. this evening, we're going to do just an in-depth analysis on how to evaluate real estate deals in this market. So if you're looking to get into real estate, either to start maybe trying to find deals that you can buy low and get into like flipping or short or long-term rentals, something of that nature. Again, buying retail might not be the way to go right now, but as investors, there's strategies, there's techniques to still be able to buy properties very low. And more importantly than that, as this market starts to pull back and as foreclosures start to ramp up that we're already seeing, there's going to be a lot of opportunities. So right now is a great time to get into, to at least learn how to get into real estate if you're not already established. And then on the other side of the coin, if you have money and you're pulling out of the stock market right now, you're selling stocks, maybe you're leaving a job and you're looking to control the money that's in your 401k. We're going to show you how to underwrite deals, how to find good borrowers, so you can go ahead and lend your money out just like banks do, with it secured by property, by real estate that's worth a lot more than the money that you're lending, and have it in a first lien position, just like the banks do. So at 6 p.m. Eastern this evening, we're going to be talking all about that and how you can start meeting some of these borrowers and lenders to get money for your deals, to lend money on deals at the Money Tank event that's coming up in Raleigh, North Carolina, August 4th and 5th. And that is a live in-person event. So myself, Chris, our entire team will be there. We're bringing in experts. We're bringing in coaches in different fields, different entrepreneurs, different strategies when it comes to real estate, saving money on taxes. Again, it's not about the money you make. It's about the money you keep. So that's what this entire event is focused around. And the cool thing is we're also doing a virtual option. So if you just cannot make it to Raleigh, North Carolina, August 4th and 5th, you can join us live from the comfort of your own home or from your smartphone, and you can watch the 2 days. And we're actually going to have some bonus sessions just for the virtual attendees. That's going to be really, really fun. So join us at 6 o'clock. We got some big discounts we're going to give away and some other bonuses. So it'll be a lot of fun this evening at 6 o'clock Eastern. To get into some of that stuff, Chris.
Love it, man. Love it, love it, love it. Well, with that being said, folks, we are at the end of our time today for What the F Happened, where we rant, we rave, and today we didn't really have to argue. It was great comments. So thank you, everybody on TikTok, Instagram, YouTube, Facebook, for all your wonderful comments. It was a really fun session. One final thing for Jandra coming in from Facebook: MPI is not what we teach. We would never teach that. That is a dangerous strategy that involves layering of insurance policies. The only one it's benefiting is, well, I'm not going to use his name, but that guy who's selling MPI, because he's just selling more and more policies. And eventually that house of cards is going to crack and fall down, just like every house of cards. There's a lot of information. Just do your due diligence on MPI. You can hear all of the bad stuff out there. You know, I always like to say, you want to get the truth, well, then search, you know, the Reddits and everything else. And if you look us up, you won't find any negative reviews, because there's not a single client that's upset with us. But that's not the case with MPI. But with that being said, I'm going to end today's show, and we will see you all at 1 p.m. Eastern for the Wealth webinar. Make sure you guys register going to chrisnaugle.com. Until then, we'll see you next time.